Hello traders, today talking about consolidations. We're going to review a couple concepts, but I just want to paint home an important picture that outside of the previous day's highs and lows, the market, if we're inside, will over the course of the day establish its high and low. And a lot of traders are trying to trade these moves inside, not realizing that you're in a low probability situation in a lot of cases, and you're actually in the consolidation itself. You're expecting to get a move, but you're getting caught into the consolidation. And so today I want to review some simple stuff, go over some basic understandings to hopefully improve your results, increase your asymmetrical risk reward, and keep you out of low probability, choppy markets that can end up causing you a lot of grief, distress, and maybe losses. So looking at gold, Friday, Monday, we start the week off, and we have the blue line that's on the chart is the previous day's low and high, as well as the pink line is the separation between Friday and Monday. Now, a lot of people have asked me if I can send them this indicator. I do not have access to this, but again, you can just draw it manually, and hopefully you're getting clear. I'm just doing big picture, so it doesn't matter what the candles look like. I just want you to understand. We'll zoom in on this in a minute. Understand that when we're inside of that previous day's blue line, we're in consolidation. So the real opportunities come when, over the course of the day, the market expands and develops its own high and low, or we break a previous day's level. That triggers, obviously, breakout traders, stops, other time frame traders into the markets, and obviously may also give us a larger asymmetrical risk reward opportunity. We've talked about the 3-day setup, Monday, Tuesday, Wednesday, Friday, Monday, Tuesday, day zero. We're going to look at an example of that on gold. So as the day starts, we have the previous day's low. We talked about zooming in on most recent U.S. session highs and lows, but for those who want to wait for the structure to set up, we have a high put in place in Asia, and then the market proceeds to trade down to the low of the previous day, breaking out and pulling back and going into consolidation. So we'll talk about a bit more about this, but after the market has made its move, it's hit the previous day's low, it then goes into consolidation. So traders are trading this stuff, often, staying at the screen. The market moved 45 minutes in one direction before opening in the second hour and moving 45 minutes in the opposite direction, taking out the previous day's low. So there's an example again. This is a 15-minute chart. We're not even talking about numbers, levels, timings, anything, just highs and lows. And that when you're inside the consolidation. The market pulls back, gives us a low of the day, and then goes sideways into consolidation. The hour prior to the equity markets, the 12-candle window in Europe, London opens. And again, we have a stop hunt. I call that the stop hunt hour. That's the hour prior. So just to review, 8 to 11 p.m., 2 to 5 a.m., 8 to 11 a.m., New York Eastern Standard Time is the 3-hour window that I focus on, primarily that middle hour. The hour prior to that, which would be 7 p.m., not so much for Asia, but 7 p.m. For Asia, 1 a.m. and 7 a.m., so 1 a.m. to 2 a.m., 7 a.m. to 8 a.m. for London and New York, that's New York Eastern Standard Time. We see the market pull into consolidation. Okay, that stop hunt hour comes on board. We'll put our colored windows on and everything in a second here. And again, hit the stops, and then proceed to continue to move lower. So we broke the previous day's low. They go into consolidation. The market proceeds to work the low of the day, which means that the low of the day is not in place yet. We're in our Europe London 12 candle window. They work the low, pull it back, work the low 1, 2, 3, bullpen hammer for a stop hunt back to the high of the London session. So once they've done that, we have a new low in place, and the market goes into consolidation again. So we have our 3-hour window in between, roughly. Market goes into consolidation. They hit the stops. Pull it back inside, and New York opens, and they go back to the high of the day. So triggered the previous day's low. They pull it back, extend the low, pull it back, extend the low a third time. We have a higher high put in place, which again is a break in structure. This is important for a market that's going to reverse. We want to see a higher high. Sometimes we won't get that because we'll get a 3-push pattern into a low for a squeeze. But we have our break in structure in the middle, then the move back to the high of the day. So we go into our next day. And again, our previous day's high and low is in place. Excuse me. The market goes sideways throughout the entire day. Obviously, we establish a high and a low, and the market continues to make new lows. But I'm painting the picture that the entire day can become a larger consolidation. Now, this was a day zero setup. Day zero, we talk about our narrow range day, peak formation, low, peak formation, high. And the market had just come off of a large move down on Friday. So this is a beautiful setup for a day zero scenario. But you'll notice inside of the previous Monday, we're inside of the high-low. The market goes sideways. So if you're looking for the best opportunities, in many cases, it's going to be once a previous day's high or low are broken. And once a session has made its move, in most cases, it will also pull back into consolidation. So traders are trading in these gap times inside. And you may be participating in a move that is moving back towards the other side. But at the same time, what I'm looking for is the explosive move that comes out of the consolidation. So we head into our day zero. The next day, the market again takes out a low of the U.S. session. So we're in consolidation. We're not even going to, again, we're not looking at timings or anything. We're just looking at the consolidations, the stop hunts, and understanding that these consolidations, once the market makes a move, it will pull back into consolidation. Again, it will hit the stops, barely triggering breakout traders early from the first mouse before pulling back and hitting the stops on the other side, going into consolidation sideways. Bullpen hammer pulls back and goes sideways. We get a bullpen hammer in our stop hunt hour just prior to the ADP non-farm payrolls coming out of our day zero sideways coil. So coming down from Monday, the market makes a high and a low on Monday. 3 pushes down, triggering the previous day's low, pulling back, hitting stops, breaking the high of the day, auctioning back down and going into a sideways coil inside of Monday's high-low. Narrow consolidation into the Asian Open for breaking out, coiling up into the previous day's high, hitting the stops down at the low of the Europe London window before rocketing up, hitting stops from Friday's shorts, and then selling off in the New York session straight down through the low of the day, triggering breakout traders from Tuesday's low for pulling back and again going into consolidation. So we draw our high-low. Excuse me. Market makes a low in Asia, then proceeds to make a lower low in that Europe London 12 candle window before again coming up and hitting stops, expanding the range, establishing a new high of the day and a new low of the day. Still inside of the previous day's high-low. U.S. session high-low. Creeping trend back up. Now I know I'm narrowing this in so that people get the concept of consolidations and high-lows. You don't need to see each individual candle, but we'll show the creeping trend. We've talked about this in the gap time, creeping trend up, hitting the stops before locking in the higher level longs. Heading into our U.S. session 12 candle window. We have our engulfment. And then the explosive fast move down off the first bar of the U.S. equities open. As we head into today's session, we have a lower high that was put in place in the U.S. session 12 candle window before breaking out and making a new high, and then failing on that breakout, pulling back inside, pulling back up into that first initial lower high, and giving us a higher low. Then we have a little high-low at the beginning of the day for our pattern within a pattern, our rectangle. Just hold my button down. Thank you for that tip on holding my shift key. So, oh boy. Then the market breaks out of our pattern and heading towards yesterday's low. Haven't quite got there yet. We have a creeping trend down. There we go. Breakout in the open of your Asian's 12 candle window. Creeper down. We have a low of the day put in place and then a stop hunt on that low of the day. We have non-farm payrolls tonight, and we are still inside of the yesterday's low. So point I'm trying to make is that if you're trading or trying to trade inside of the high and the low, you're often going to get caught into these little creeping trends or these consolidations that can go on and on and on. But if you're trading at the beginning of the sessions in that equity hour, in that 12 candle window, if there's been a coil or a creeping trend, we'll often see an explosive move that can end very quickly. Now, when we get our day zero, again, people have asked what's a day zero. Day zero is a narrow range day following in often cases, a strong move off of a high or a low from a previous day's session. We might get something like if we have a large move on payrolls, we may get something Monday, Tuesday, Wednesday. But after the market has made a move, we'll often see this market pull back into consolidation. They make their move, goes into consolidation. Stop an hour comes around, they will make a move to a high or a low again, and then the process starts again. Hit the stops, trend the market. Let's take a look at the euro. So the euro showed a great example of a 3-day setup again, and for me, the major pairs, because the volatility is not there that gold offers, I usually just set an alert, or I will manually check the charts each day. But we can see going into the week, we had Friday's high-low, and the week opens up, and we're inside. And the market proceeds to creep back up on Monday. So no high-low hit. We get a lower session, U.S. session high-low hit before in the U.S. window on Monday. The market auctions back down. So we now have a Monday high-low. And again, the range is narrower, inside bar. The market creeps back up on Tuesday into the peak formation that Monday formed, hitting stops at break even without taking out the high before fast move down on the creeping trend back up. Now, for those of you who wanted to be zoomed in to see these charts, no problem. But again, just, it's the concept. I want you to see the concept. You can see the creeping trend and then the fast stop hunt back to the low of the day. No previous daily highs or lows were broken. So you can open up your own charts, take a look. Don't need anything fancy, just to be aware of where the high and the low are. One thing that we can agree on that is not hindsight, that is, right side trading is the high and the low. It is what it is. Whether you're a trend trader, swing trader, scalper, whatever, the high and the low or the high and the low. So if they haven't hit a previous day's high and low, I'm inside, which means that I need the market to establish a high and a low before I can trade it. We get lower high put in the New York session, and again the creep starts back up again. I'm having real trouble with my cursor here. There we go. Hold my shift button on that tip. Okay, so creeping trend back up, boom, fast move back down. Now we've triggered other time frame traders into the market. They were triggered at the end of the Tuesday session. Creeping trend back up, they hit the stops. They go back up and hit the previous day's high. And we also get, at the very beginning of the New York equity hour open, a bear pin hammer at the high after stops have been hit. So if this trade occurred at the gap time, some traders may not have got that, or they're in North America, whatever that may be. Engulfment pin hammer at the previous day's low. Pulls back inside, gives us a shortened W for a explosive move up on ADP non-farm payrolls on Wednesday, hitting the previous day's high, and stops are hit. And then we get the bear pin hammer at the high for the explosive fast move down. So important to just remember that stepping back and allowing the bigger structure to set up can give us better risk-reward trading opportunities and not get caught into all this drivel back and forth. Wait. Let the market establish. If we're inside and we haven't hit a previous day's high or low, let the market establish the highs and lows for us. We can project that across. We have a large consolidation that occurred over the course of one full entire day. Now we have traders in this market potentially short on the break of yesterday's bar. And we now may have a low of the day being put in place into the beginning of this session. Now we do have non-farm payrolls tonight, but again, they've triggered yesterday's low. We've got low-hanging fruit on these lower level shorts at the high of the day. How this market proceeds from here, time will tell. So now I have a high of the day in place. I have a low of the day in place. We have other time frame traders into the market. We had a narrow range day yesterday. We have yesterday's high up top. Payrolls, if this market was to lock in a low and protect this and come back inside of yesterday's low, we could see possibly an explosive move north, back up towards traders who were short on Wednesday's news in the U.S. equity session. So stepping back, letting this consolidation, staying out of the consolidation, letting the market set up, looking for better asymmetrical risk-reward opportunities. If you're in a move, for example, in gold, Asia may move 25 to 50 pips. Take the money off the table, step back, let the market go into consolidation again, trigger stops, or break new highs or break new lows, and allow us to watch how price behaves when it gets to those levels, major round numbers, 50s and double zeros. People have asked me, what do you mean by that? On gold, I dropped the last digit, very last digit. It's the number prior to the decimal, and after that give me my pip increments. 2.5 is 25, 5.0, 50. So 2.5 to 5.0 is a 25 pip move. So as we speak right now, the euro potentially is giving us our low of the day W. Now, this market could just roll over again and break that low, but if the market was to pull back up inside and make a new high or break towards new highs, we may have a low of the day establishing itself heading into the non-farm payrolls tonight. Something to watch. Not a trade recommendation, but again, thank you for all the questions and feedback. Lots happening around the world. More important than ever to be mastering your skills, especially if you're working from home. We got multiple states locked down at the moment. Stick to your highest probability opportunities. And just to answer a couple questions, the indicators, if you're using the sessions indicator, it's a free download down in the box below. This is for MT4. If you're using something else, I don't know. You'll have to look for that. You don't even need it. It's just more important to understand the timing window. If you're using sweet spots for round numbers, again, question is, how do I set them? If you're trading oil, for example, I'll drop the 0 and make it 10 and 25. If it's Bitcoin, you might want to add an extra 0. That's all you have to do. And so this will give you your quarter level increments. And again, just, they're free downloads. If you don't have them, you can draw those numbers on, or just be aware of the levels that you're trading at during that session. Keep it simple, traders. Stay disciplined, stay focused. Try to avoid the chop and the low probability consolidations. Stick to the highest probability time frames, that middle hour especially. Highs and lows of the day. Stop hunt hour can often give us our lock in the high or lock in the low heading into a session. Have a great weekend, and may the markets
Hi
go.
traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.